you know, one of the things that everybody says, you know, what we're going to have to look for, when we think of these things, we think of English, you know, primary language, English only, but, you know, Spanish speaking and Mandarin represents, you know, tremendous vectors of potential growth when, you know, when you sit down and you look at the data. So, yeah, in technology, in IT especially, when we look at costs, we are always going to come back to something called Moore's Law. And it's a performance and capacity measure that says, you know, every 18 months, you know, essentially a chip will get twice as fast and cost half as much. So, just to give you an example, a transistor, the stuff that goes into, you know, our everyday objects, in 1950, a transistor cost $5. In 1968, the cost had dropped to $1. Today, $1 will buy you 50 million transistors. So it's even difficult to plot that type of, you know, you've got to take one and divide it by 50 million, and then Excel just won't graph that correctly. But it's a tremendous drop, right? It's unbelievable. So components, you know, the stuff that goes into things, memory, storage, CPUs, bandwidth, all these things that we need to run our institutions drop significantly. The composites, you know, the things that are ultimately made from the components, iPods, cell phones, netbooks, you know, DSL modems, these things all drop in price. Why isn't the cost of the inputs to provide education decreasing? Because if you look at Google's model, it should cost $20 to deliver a lecture. But it doesn't. So we're going to look at that. Actually, Apple has some interesting, and MIT has some interesting things to say about the cost of lectures. So, University of Phoenix, at that 17.6 per student, charges a rate of tuition that is comparable with, and in some cases, less than HBCUs. Primary difference between a Phoenix model and the typical HBCU, in terms of cost, is scale. How many people can we service? Well, if we're just talking about the physical plant, well, that's a finite number. But when we take learning out of the academy and we use this technology, especially digital platforms, the stuff we saw earlier in the day, Twitter, Facebook, YouTube, and, you know, all of those things, then we begin to see how it's actually accessible and affordable to everyone. We're not talking about huge investments. Now, the other thing I wanted to look at was cost analysis, you know, from a global perspective. A computer science degree, traditional, you know, I attend the university, right? Eat, sleep, drink, read there. Clark Atlanta, go there 4 years, come out with a computer science degree, $110,000. Same degree in Beijing, $13,000. So if we consider our institutions as being knowledge factories, right? We have this assembly line, people come in, and then they go out, enhanced, improved, added value. We create the knowledge worker. 2 inputs go into the assembly line in parallel. One comes out costing $110,000. The other comes out costing $13,000. Google's trying to disrupt this. And where they go, we might want to, you know, hang on. Let's look at a political science degree. Online. 4 years at Spelman, $120,000. University of London, more specifically, the London School of Economics, $5,800. And I don't even have to leave home. So where do we go? What do we do with this information? And, you know, how many people know it, and what's going to happen when everybody knows it? So let's look at all this. There we go. So just to lighten the mood on that, said, okay, there are 2 hybrids on the market, because what I did is I averaged the cost between the Clark Atlanta and the Stone degree, and then I averaged the cost between Beijing University's science degree and University of London's humanities degree. And so the relationship would be like Ford producing a hybrid car that costs $115K, Toyota introduces a similar vehicle, doesn't have to be the same, it has to be close enough. For $9K, what are the long-term prospects for Ford? Now, if I would have, you know, put this slide up 5 or 6 years ago, that would have been a pretty offensive thing to say. But now, go on like Google Finance and try and look up the stock symbol for GM. It ain't there. Just historical data. Because it's bankrupt. You can't go buy GM stock right now if you want to. Who would have thought that would happen? So, now we want to reassess the value proposition, why abundance and not scarcity are new drivers. And this is kind of, I guess counterintuitive to the way we've always thought about things. In a networked economy, the more plentiful things become, the more valuable they become. Now, this flies in the face of what we have learned coming out of the industrial age, which was value does come from scarcity, right? The icons of wealth in the industrial age, diamonds, gold, oil, they're all deemed precious because they were scarce. And whoever controlled the scarcity, well, they profited. And colleges are a lot like that, right? It's based upon scarcity, availability. The corollary to that is that when things are made plentiful, they were always thought of as becoming devalued, right? So carpets, for example. Carpets were once only handmade, right? And so there were few of them.